President Trump meeting at the White House with Fed Chair Jay Powell. Trump tweeting out after that meeting that they discussed interest rates and negative interest. Important to get that right. Joining us now is Bloomberg Intelligence Chief Emerging Markets Credit Strategist Damian Sassower. It's clear that the Federal Reserve is pushing back. It got the statement out first,
yes.
telling us all that Jerome Powell did not go off script, and he specifically did not talk monetary policy with the president other than saying, we look at the data incoming. The president then tweets this. How much are investors taking this seriously as a signal that anything might happen with interest rates because of the president?
Well, to Guy's point, definitely the volumes are down, but the reaction in the dollar tells you everything you need to know. Look, in a world of negative yields, it means three things. It means that investors need to reach for more yield because they're robbing returns from the future and bringing it forward here. It means they need to save more. Why? Because return expectations come down over time. If you have negative yields, it's just pushing things lower. And so all these things are sort of weighing on the White House and obviously weighing on the Fed. But from what I understand, Chair Powell didn't go off script, and he kind of repeated a lot of the things that he made in his testimony most recently to Congress.
But Damian, the fact that the market has reacted in the way that it has must indicate that the market at least believes that to a certain extent this pressure is having an effect.
Well, I think what the market's probably thinking is that Trump is applying as much pressure as possible for the Fed to continue cutting rates to stimulate the U.S. economy. And so I think that's why the dollar probably is coming off, at least initially here, because lower yields means a weaker dollar, I think, Guy.